and welcome to Futures Trading Alpha. This is a video on the three main ingredients as far as I'm concerned when it comes to order flow and trading the order flow. I have 8 screens at home and I tend to always look at the same 4 screens or 5 screens. I can condense everything within 3, obviously. I have 8 altogether, but I mean, really there are 3 screens that I mainly look at, and when I say 4 or 5, it's more that I'm going to split some different, time units on several screens for the sake of clarity. But really, within 3 screens, I have all the answers to the question that I need to answer myself in order to be able to trade. So if I go away and take a laptop and 2 USB screens and put them in a bag, I have, albeit 3, but I have, albeit small, sorry, but I have 3 screens which I can look at anywhere in a hotel, anywhere in the world. So, or in a hotel somewhere else, as long as I have an internet, obviously, connection. So, what are these 3 screens? Well, really, I guess, regardless of the unit you're looking at here, we're looking at daily volume profile. So you can see we've got the volume profile here on the right. So that's the VP, and we've got the TPO here on the left hand side. So can't really use this pen very much. Try again. So that's the TPO here. Alright, so anyway, point being, I am looking at, obviously, market profile here. So it's each bar, if you like, is a 30-minute breakdown, and it sort of gives me a view of the day split or broken down in 30 minutes bars. And here really it's just regardless of the time, there's no time reference in here. All it's giving me is the volume that has accumulated throughout the day at each price level here. Alright, so it's a fairly simple concept, and it is very useful indeed to give us a view of how much the market has spent, where are the areas where the market has spent the most time, and has it accumulated volume accordingly where it has spent time. You can see that it's the case here. So this is where that's the actually the point of control in terms of the TPO. So the market profile is here, up here. So this is where it spent the most time, but this is not where it spent the most volume, where it accumulated the most volume. Where it transacted the most volume is here. So you can see we spend a lot of time here not doing very much volume. We still spend some time here, but less than here and less than here. And however, this is the obviously value area when it comes to the volume, and this is the point of control, volume point of control. This is where we accumulated the most contract, i.e. 2696, so 5,696 contracts were exchanged here. That's the point of control. So that's going to give me throughout the day some indications of where we spend time and why, and how we spend time. Do we spend time just not exchanging very much contracts, or do we find that there is value and therefore we spend time somewhere, still the case here, and we do exchange contracts. Now, where we do not spend time, and you can see here we haven't spent time, and equally we haven't transacted any volume, so contracts have not been exchanged, we have what we call a low volume node, which means that it's effectively a hole in the profile. So if I look at my profile very tight here, you can see clearly we have a hole here between an area where we had more volume, and it's the same for the TPO, but it's time, and another area we have more volume and much more volume here. So this is a low volume node. Now, if I break down by timing, you can see that what the low volume node is effectively is, yes, it's little volume transacted, but it means, why was there little volume exchange here? Is because this was not an area where the market wanted to stop, wanted to accumulate anything, or wanted to, there was no perception of value. You can see this was a down day, so it opened here. It's the Asian session, not very much is being achieved, and we get to the end of the Asian session, London open, and as soon as London open, London or Europe, if you like, doesn't see the value of, you're looking at 60 euro dollar future, the value wasn't perceived to be there, nor here, but here. This is pretty much where the value was perceived as, we spent a bit of time here, and that's the reason we had this TPO, so that's the time point of control here, is because of this time we spend within all this time, all overnight, effectively, where we spend the Asian session spend time on. But there was a little volume exchange. Now here we market open 8 a.m. London open, and London takes the market here. The value, perception of value, is down here. And the reason why it's down here, and this is why we have a quick, short 30 minutes, and within 30 minutes, okay, we move from here, 1350, to all the way, effectively, to 1318. So it's like 40 points, bang. Whereas here, if you look at it, we spend half an hour, half an hour, half an hour, half an hour. We spend 7 hours, 8 hours even, doing nothing, doing a very small range. And here, within the space of half an hour, as soon as London opens, bang, we go all the way 50 points or 40 points below. And from here, we spend some time here, we generate volume here, and this is how the volume profile value area is being generated. So we spend a lot of time here exchanging contracts. So why is this important? Well, this is important because it's telling me what's happening on the day as I'm trading. Okay, and surely see that as soon as London opens, I've got a down day, it's taking me all the way down here, we spend a bit of time here, we go down a level below, we spend a bit of time here, we accumulate, and we distribute. So we accumulate, we distribute, we accumulate a bit, we distribute, accumulate slightly, distribute, and accumulate again. Right. So this is pretty much how the market moves most of the time. It's rare to have, down, 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 and in terms of a market profile, you would have an open drive, you had there's all kind of different drives. This is not meant to be a TPO market profile course, but it's just meant to say, I can see how the market has evolved throughout the hour, throughout the half hours, how it accumulated volume, and where the value is being perceived to be. Right. So that's pretty much simple. I can look at that. This is daily. I can have exactly the same thing if I want to look at it I've got another screen where, and I could all be within a screen, by the way. So I'll just consider this to be one screen. I have exactly the same thing here on a weekly basis, and I have another screen where I'm going to be looking exactly at the same thing, but where each profile is going to be a month. Okay, so it's exactly the same thing that what we're looking at here, with a TPO, and I've got a month volume profile. And you can see that here quite clearly. We're not at the lowest, but we're towards the lower part of. Obviously, that was on the on the 19th today. So far, you can see we're pretty much towards the end. So value is being perceived as being lower than it was at the beginning of the month. Now, with that in mind, all that, as I said, could be on one single screen. But with that in mind, what is interesting is one thing to look at what's happening during the day, throughout the day, as you're trading. What's interesting is this is going to give me an indication of where. So these low volume nodes tend to be revisited. They tend to be rejected originally, and once they're being accepted and revisited and retested, volume is going to be generated here, which simply means that we're going to go back in this area. We might reject it once, or we might reject the market. The market might say, well, last time we were here, it was not interesting, value isn't here. But eventually market will come back here, and traders will exchange contracts here, and volume will fill in these low volume nodes. and that's pretty much, it doesn't, it pretty much a given that it will. This is a very high probability. When is a different question. Okay. Now, these, very simply, all these sort of low volume nodes is something I like to highlight, and they give me, even if they're not being filled in but by a lot of volume, you know, it gives me an idea and a reference point of where the market could go. So on that day, for example, which was Thursday, okay, again, I started to trade in the morning. My time was probably, you know, well, way here. I was probably here just before the London Open. I tend to look at the market at 6 a.m. So I would have been here at this point in time, so 8 a.m. Obviously 8 a.m. I don't know here what's going to happen, right? I wish, but I don't. Now, if I look at the previous days, I have drawn, as you can see, this yellow zone here. This yellow zone is from this day here, so that's the previous day where I have a low volume node. There's a little wedge here in terms of volume and TPO, but it's a low volume node. I also have, without being too technical, I've got a pull low here in terms of the TPO. Then I have another low volume node on the way on the day, sorry, before that. So that reinforces this area here, and then from here, so here this is covering pretty much overlapping here. So that's, you know, the day even before that. Here, as you can see, we've got an inside day. So that's something else we want to look at: the engulfing bars, the engulfing days, the outside days, and the inside days. That's again another thing we want to pay attention to, is what sort of day that we've had. But here we've got this low node, which is quite, you know, it goes all the way to 1317. So I'm going to, these overlap, but I'm going to drag it down all the way here. Alright, so I drag it down all the way here, so we're here. And then I look at the day even before that. And the day before that, oh, I've got a pull low here again, and I've got a ugly, like, sort of little, it's not a low volume node per se, but it's you know, it's a buying tail, and it's fine, but I mean, obviously there's less volume here, and that will be in turn revisited, and that's, you know, so that's what I had done yesterday here, when I didn't know what was going to happen, when it was 8 a.m. Before we had this big move down. You know, I'll look at it here. I don't know if you can see it here. I didn't know that it was going to go down, but I thought, okay, I have drawn this area, and that was my target. If we were going to go down, the market was going to be short, that was going to be my target. If the market was going to go up from here, and bear in mind we stopped here, it's 7:30, I have no clue what's happening here, right? Then I know effectively as much as here, right? That's what I know here. Alright, I can't see all that. I can't see all that. Alright? So I'm here. So I'm like, okay, if we go down, that could be your first target. This overlapping 1, 2, 3. Okay, so this area here. And then I would go all the way to here. And this is really, that was my, you know, I'm just being honest, I didn't see that it would go down even further. Or I could see that it could, because you will want to go, you always want to try to understand where could it go next. But taking one thing at a time, and this is going back to even further, so you've got this part here that we've taken on board, and you've got this other sort of overlapping low volume node and ugly volume here. I mean, it's so yes, it could have gone effectively all the way here, you know, to this 2800, sorry, 112.80 here, and if we go even further, we can go all the way down to 112.73. Okay, eventually it did go to pretty much to 112.80, a little bit further down, you know, but effectively it went all the way down here. All right. So this is not. This is not. I obviously wanted to be cautious. I didn't want to go all the way down. I hadn't predicted that it would go all the way down like that. But what I had, what I had, you know, envisaged that it could go down, and if it did, I would stop here. I mean, I would expect it to go all the way to here. And likewise, because I didn't know that, if it went up, then I had other areas, as you can see up here. And in fact, I pretty much need to do it again because I've got a lot of overlapping yellow and dark green and so on. And that's something you want to do and you know, sort of draw on a weekly basis. Usually I do that on a weekly basis. So you have an up scenario. So it's telling me where, if we go up, where do we go? If we go down, where do we go? If we go sideways, i.e. we consolidate, we have a balance day, where do we go? Well, what do we do? So I think that's the second question. The first question is where do we go? Possibly from the past, and you can look at this on a daily basis, you can look at this on a weekly basis, or you can look at that on a monthly basis as well. The second screen I want to look at. So that's while I've drawn all these things and I'm in the market. You can see here I'm still in a trade. I haven't. I've got to stop here. That market hit 112.83. That's one contract. So one contract was taken all the way. See here, I shorted at 113.50, which is I didn't take the whole. Short here. I just took one part of it because 150.40 is here. So I took it here. I didn't take the first sort of leg right at 8 o'clock. I took it at 8:30 and I pretty much got in at 8:30 and bump. And I stayed in. This was fairly straightforward. Half an hour, bang, all the way here. We go back up. But you know, at this stage, we already went below my expected area. We bounce back on it and we go back down. So I'm staying in and I'm still in now as we speak. All right. So there's only one contract. So yeah, there's always a case where you think I'm on $800, and what if I had 10 contracts and 20 contracts and 50 contracts, 100 contracts, 1,000? We can, we can sort of imagine and speculate, and I think this is a good trade. And this is a good trade. I only have one contract. I can stay overnight. I can stay the whole weekend. I've got enough margin. This is not an issue. Obviously, for my stop here, it's quite tight. So as soon as the market opens, I don't know which way it's going to go. But even if it bounces back, boom, I'm out. $800 straight away. So not too shabby, not too bad. And that obviously takes us to the second screen, which is the DOM. This is something I'm not going to go through DOM now, but it's another thing that you want to look at. At the moment, the market is not open, so that's why you have no limit, as you can see here, and no market orders coming in, and the market isn't moving, but my orders obviously still showing. And along with the DOM, I was looking at the footprint. I think that's the third screen, because it's on the second screen, but that's one of the important things. So this is simply putting some on a chart and some order into the market orders which are coming in, which we can't see at the moment, and they're being displayed this way. I can have information on each bar, and I can see if the delta is growing. I can see if there's absorption. I can see if there's who's in control. I can see if it's responsive selling or initiative selling or buying. I can see a number of things. I can see the delta maximum, minimum, the volume. I can see there was some bit of volume here, for example, the speed of the volume per second on each bar. You can see that here we've got 620, it was twice as many on the buyers and sellers. Here it's pretty equivalent, but we've got quite big numbers here. We over 1,000 here and here, here and here, which is twice as much, as I said, as the levels before. So it's like clearly, people getting out of positions here, being absorbed. Bam, market is closed. Right. So that's another sort of degree of granularity and details that you can see on the footprint. And if you were to look at the footprint alongside, and that's normally another screen, but I don't want to, that's the third screen I'm looking at. I'm looking at a normal chart, pretty much. Okay, this chart shows me a number of things, but here I've got my 30 minutes chart. So this is just showing the same thing that this TPO versus volume profile we looked at. In fact, if I was going to go back all the way to 8 o'clock, all the way to 8 o'clock, okay, no, sorry, I'm way too far. And yesterday was the 18th. There we go. So you can see here what happened. You can see exactly what happened. That's as much as I knew. We were here. Okay, we were here. That's pretty much the TPO was showing you. We were here. Asian session and Asian session. I have my scenario. Do we go up? If we go up, where do we go? Possibly. If we go down, where do we go? I've got my area is being, it's been drawn. I base myself on previous days, so I know I've got some indication of where it could go, right? Then next thing we know, market opens. It's 8 o'clock. I'm not 7:30 here. Sorry, 8 o'clock here. You can see that sellers are immediately stepping in. You can see there's mostly red in here, with dark red in here. So sellers stepping in and pushing the market down. Right. Bear in mind that behind each, so that's bid ask, behind each, so behind these 400, behind this 350, behind the 362. Yes, they're all sellers, but if you've got buyers on the limits side here, so they would have been here on the other side. Otherwise, if there was no counterparty, the market wouldn't move. Right. So 8 o'clock, I'm not in the market yet, and that's when I come in. I come in, as we saw, at 1350, which is here, which isn't too shabby. So here we had a little sort of bounce back all the way here, bam, and then when I see that it starts to push again here, okay, I decide to join the train, and we go down all the way here. I play, you can see these very dark colors, like big sellers stepping in, and it's 8 AM, so that's a lot of volume, or 8 AM. You can see the volume suddenly increases. You can see that the delta is very positive. Not, delta for this bar is nearly at the maximum of the, well, near as high as the maximum delta for the bar. You can see that 17, so there's a lot of speed, there's volume per second, it's fast compared to 5, compared to 1.677, this is quick, it's stepping in. Next bar 13, so these two bars, these two big bars that we saw here, alright, boom, boom, it's exactly the same two bars here. So I can really get into the details, really see all the granularity. I can see that here in this area, 629, 644, but we'll still have size selling as well on the other side. 1052. It's 8:30 in the morning. That's a lot. All right. So buyers are also stepping in, trying to, there are some aggressive buyers in there, but still, all of these aggressive market orders being completely absorbed. There's real absorption, and bang, sellers stepping again, being more aggressive, and it goes down. There's a little bounce back, the little consolidation that we saw. It goes on for a little while, boom, we consolidate, and then we start distributing again. Not as aggressive as what we've seen earlier in the morning, but it goes sideways a bit, and then slowly it's not the same, it's a bit more progressive, but still I can have the details of every bar, speed on each bar, volume level, delta level, and it gives me all the information I need. So it went further down than I expected. but it did play well, and the bottom line is, meanwhile, you know, I'm in a $800 trade with one contract, which isn't not too bad. See, so again here, this is the same bar, 830, bang bang. The width of the bar means that there is volume, as you can see here. All right. Now there's one interesting thing here, which I think it's worth noticing. If you look here as well, you can see it here. So we've got a negative delta here, right? And then here we've got a very down bar, it's a huge bar, a lot of volume. It's very quick, as we saw, and so is this one. And then it sort of starts to consolidate. But it's within these two bars, you can see we've got positive delta, positive delta, positive delta, positive delta, big positive delta, 1,000. Right? And you can see here as well that we've got a bid ask, and you can see this is all about the ask. All right, all ask volume here. There's no bid. I mean, it's irrelevant compared to it. And you can see as well, it's fairly clear that there is a real divergence between a growing, increasing delta. We go all the way to 9,000 here. All right, and a market which is going down. That's what is called a delta divergence. That's a real divergence. So it's not looking at bar by bar. It's like a trend, and we can see that there is really a real divergence in here. Now, why is that? Is the next question along, because noticing this, it does happen a lot. It certainly does happen a lot when you look at the 6E. In fact, whenever there's a big move in the 6E, it does happen a lot. And it does happen on other instruments. Don't do all instruments, I'm just talking about those I know, but 6E certainly does happen a lot. Clearly, we've got more aggressive buyers than we have aggressive sellers, even though we saw here aggressive sellers. But there were more size in terms of the aggressive buyers. So what could we have here? Well, I think it's a combination of two things. Number one, we have obviously stops being hit. So stops are liquidity, resting orders, and when the market comes to a certain level, well, it sort of triggers some of these stops, so that becomes aggressive, effectively, buying orders. People were, in that case, would have been short orders, and they have there would be a stop somewhere, which becomes a long order, right? But so that happens a lot. Now, here the market is going down. Yes, I can see that there would have been some stops in here. But equally, we would have thought that when you see that happening here, and when you see what we saw as well in the previous days, well, you would not trigger your stop. You would, unless they're already placed there and no one is looking after them, it's all, automated. Then when you see that, you wouldn't necessarily put a stop. Obviously, you can see we have more. You can see all this blue area here. Blue is quite high here as well, and blue is high for buyers, by the way. So it's mix here, but there's clearly stops here, and it's probably, as we get towards the end of a bar, there are some stops to get out, to exit the positions, and likewise here. And you can see some green here picking up as well, and towards the bottom of the, not the bottom, the middle of this second bar. But in that case, I don't think it actually, and I will never know for sure, but I don't think this was stops, mainly. There were obviously stops in there, that's for sure. But a lot of the time, and you can see that we see size here. Okay, we see 800, 500, 363, even those we are not highlighted, 244, 500, 500, 300, 260, 261, 218, 500, 700, 700. Again, look, 400, 600, 500, 600, 300, 300, 300, 300. This is quite big, you know. So to me, even though yes, and here again, same, you know, it's blue is high, it's like dark red, 700, 600, 800. So to me, what this indicates is that yes, there might have been stop in here, but this is actually bigger orders. So obviously, when we have 800 or 700, it's not 800, you know, market order which was triggered. No one would do that, but it's the accumulation on that level, on each level. So here, to me, it's an indication of actual participant who wanted to buy, and because they wanted to buy, they normally tend to have size, so not the size of 800, but they may have the size of 50 or 40 or whatever. And what is best? When is the best time to buy? Well, it's not the best time to buy when the market is going up. The market is going up. By the time you buy, you invariably you will be, you know, too late, and you will get to the end of the move, and by the time you've bought all the contracts you wanted to buy, it's probably going to reverse against you. And more to the point, you need liquidity, and liquidity when you're a buyer is sellers. Okay, so here we can obviously see aggressive sellers, but these aggressive sellers need to find limit ordered buyers, and here we've got aggressive buyers, and these aggressive buyers need to find limit orders sellers. So that means that we had here aggressive sellers sending market orders, selling to buyers who had limit orders in the book here. You know, it's not something you make up, it would have been in the book here. And alongside with these market orders, obviously aggressive selling, there would have been also sellers who were placed as sellers here, alright, on the ask, wishing to sell at specific levels, who would have served, so we can't see it now at the moment, but would have served all these guys wanting to buy. So when there is a move like that, when it's aggressive and there's a real trend, when the whole market is selling overall with market orders but also with limit orders, this is when you get a nice divergence like that, which means that they knew they'd find liquidity, so they're not pushing the market, it's being absorbed. That's why the market keeps going down while the delta keeps coming up. But it doesn't really matter, they don't care. All they care about is being served. Alright, and being served at the right price. If you're being served with liquidity, you're being served. If you want to sell here and there's liquidity, you know, if you want to sell here, you know, and you need to have liquidity here. If you have liquidity here at one level or two levels, you'd be served on one of two levels, so your price will be the average of one or two levels. Good price. If you want to buy at one level and there's absolute as one here, or 10, well, you would be served here and 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 here. And your average price, because you're being served on 20 levels or 10 levels or 5 levels, will be much lower and much worse than if you're being served on 1 or 2 levels. Hence, sell when the market is going up and buy when the market is going down. I know it's fairly counterintuitive, but it's exactly what's happening, and you can see it here. Now that's it. That was the three main screens I would be looking at. In fact, you probably feel you have seen more than 3, but it's because I keep putting out the screens from onto this main screen. But bear in mind, on the daily market profile and versus volume profile, you can look at it on the same screen for monthly and weekly and compare to each other. And in fact, sometimes, because I'm looking at daily here, but other participants have more weekly view or more monthly view or longer view, so it's good to combine the daily, the weekly, and the monthly, and see when you have a point like that and a level on the weekly. Say, oh, okay, what does it correspond to on the weekly level? Here's low of the week, obviously, and low of the previous week as well, which is more importantly interesting. And where does it coincide on the monthly one. I wish you a good evening. I wish you a good Easter weekend, and until next time, bye bye.